What is going on, guys? Welcome back. It is Institutional here, and we are back with another video. I know we haven't done this in a while, but we're back to it. And I wanted to show you guys a little concept that people, or I guess SMC traders, don't really comprehend. And that comes to always having, structure or understanding what SMC really is. So to start off with, what is SMC? Well, so many concepts are derived on the idea that we are doing the opposite always of what retail ideology is doing, right? So we want to always have a kind of exploitative, basis when we're looking at the market in terms of what retail ideology has been taught. So when we're first looking at the market, we want to ask ourselves, right, where can retail be looking to capitalize from? And when you ask yourself that question, then you tell yourself after, right, well, if you're looking to capitalize from there, what can I do to get in the opposite end to grab that order, right? So a couple of things above that, right? If, for example, there's a level of equal lows here, you have to know that at SMC Concepts, you want to be looking to target those lows, right? It doesn't matter what level of support or quote unquote support as they call it, right? It'll just be liquidity where you want to be looking to target that and then continue on with the trend. Let's say that we have price going up like this correctively, right? And as SMC trader, you can definitely capitalize from this because there's going to be levels of order blocks here, right? But you have to know that once we get to that third touch, well, what is that third touch? We understand that now as retail ideology, 1 touch, 2 touch, 3 touch makes a trend line, right? So once that trend is intact, you can be looking to target those lows because retail is going to be looking for that continuation from that level. So that's one. A couple of things there. Another thing is, as SMC traders, you have to know the footprints of SMC as well. So just because price goes up and it leaves us a fair value gap right here, does not mean that that's always going to be an ideal fair value gap for you to capitalize from, right? Why? Because if this fair value gap under has either equal lows, trend and liquidity, or liquidity under that, you're going to want to be looking to target that. But now you can use this as a footprint to look for the opposite end. So what does that mean? I don't think Steve goes over this entirely too much, but I'll try to help you guys understand it. So when you're looking at breakers, right? Well, what are breakers? They are order blocks that have taken liquidity, but they failed to continue on with the trend, right? So a breaker, what that will be is you have an order block here that again, grab liquidity, failed to break with the trend. So this means that so many concepts or so many traders had some pending orders here. What they're going to want to be doing is they're going to want to come and bring price back up so they can mitigate their losses and then continue on with the trend. If you're looking at the same concept with fair value gaps, well, we kind of have the same ideal. You're looking at fair value gaps, right? And you have a fair value gap here. And let's say at a discount, right? And price comes down here and it actually breaks it. Majority of the time, there's going to be a selling pool there. So they'll have a new fair value gap here or a new order block here where you can be looking for price to come back up and mitigate some losses here and then continue on with the trend. So let's take a look at this price action right here. And this explains the majority of things that I'm covering with you guys. And this is a trade that I took yesterday with my mentorship group. So if we were to just put this range high to this range low right here, right? Let's go ahead and do that real quick. Try right here. So this range low. This is where price can start getting confusing. So if you look at price, well, what is price doing in the early morning at 9:30? Well, price comes down, it pushes up higher, so it makes a higher low point, that leads to a higher low point, a higher high, so it leads to a higher low point, that leads to a higher high. So what is price left for us right here? Well, it has left for us an order block, right? And a fair value gap, where you can definitely be looking to capitalize from this range low to this range high, right? So what could you have had here? You had your longs, stop loss, we're looking to supplement the value gap, target the height right there. And I said a 4 to 1 early in the morning, right? But what does price do after that? That gives you a new range low, that gives you a new range high. So what do you have right here? You also have a value gap, right? Now the question is, do you want to be looking to capitalize from this? And you need to have context behind that. And the reason and the real answer is no. Well, First of all, you want to be looking for rejection when price comes down to that pre-rally gap, right? You look at this, we drop down, a nice little bearish engulfing, and then we have a doji candlestick which is an indecision candle, but price is already showing us some rejection here. Here, price just drops below and then continues dropping. So we broke out of this rally gap. But having more context to what we covered over here towards the left, if you look at price, what is this doing here, right? What is this right here? 1, 2, 3. So what is this going to be for the retail trader? This is going to be trend line liquidity, right? So now understanding that we have trend liquidity there, we can take it always, what always comes first as SMC traders is where is the liquidity? Structure comes second, right? So when you're looking at a chart, there's another thing. When you're looking at a chart, you want to ask yourself, if we are in a bull trend, right, where is the liquidity? Even if we're trying to push up higher, the liquidity majority of the time can be sitting down here. So you're looking to target that, but you have to know that you're still in a bull trend once you grab this liquidity. So then price will continue going higher. But ideally, what we want to be looking at target first is always going to be liquidity, and then structure comes second. But first is always liquidity, because that's what the market moves from, liquidity to liquidity. So now, understanding this trend of liquidity that we have right here, right? And if you look at price, what I told you guys, price breaks out of structure, so it now leaves you what? A selling pool above that pre-rally gap. So if any smart money trader was looking to buy from this, they're going to have pending orders here. So what they're going to want to be doing is grab the orders that are sitting above. If you also take a look at price here, what do we have done here? We have a level of support, right? We have equal lows that SMC traders are going to be looking to capitalize from. So equal lows and equal lows, right? So this buying pool in the past is now going to get used as a selling pool right here. So if you go ahead and just put this above right here, here's your value gap, right? You would have had your short right here at the 50%, stop loss anywhere above. And then you can be targeting the lows either here or lows on here, right? For a nice little 4 or 7 to 1. Simple as it is. Then now you continue following price, because price is always going to do what? It's always going to leave its footprint. So if you continue looking at price here, right? Price drops down lower here. And what does it leave for us right here? A new bearish rally gap, right? But what does price do? It breaks above that. So what is SMC going to be doing here? They're going to want to be using this rally gap as a buying pool now for a continuation of long, so they can see how that happens, right? They shoot price above right here, we break structure, and we develop a new what? A new rally gap right here. So you can again be looking to capitalize from that, targeting the highs up here. If you continue going on with price, again, it's the same thing over and over again, but they don't really explain this too much. What do you have right here? You have a what? A bearish rally gap. But what do? Do we respect it? Now we break it. So what is this going to mean for us? It means that it's going to get used as a buying pool. If you look at price, what does price leave for us right here? A nice little order block with a rally gap in mind. So what do you do here? You could be targeting the highs above, and you continue on going with price, understanding this SMC ideology, right? You don't always, you know that you're a bullish trend, but you know that price has to come down and grab the liquidity first. Once it grabs it, you're looking for these selling pools that are now going to get used as buying pools, and then you're following your SMC structure. Now, if we take a look at today's price action, kind of have the same thing, right? Let's take a look at today's price action. If you look at price action today, well, what is price doing here? Price drops down, right? It leaves you what? Your last footprint of a bearish rally gap right here. So here you have your last bearish rally gap. We broke out of it. And what does price leave for us right here? A nice order block that breaks out of the structure point. So once you understand that idea, again, you can be looking at long price from that, shoot price up higher, and you continue on with price action. What does price do after that, right? Gives you a nice rally gap right here, same concept, and you're following through with PA. So it's as simple as understanding that, you know, what is breakers and what are FVGS gaps? What do they actually mean? Because people don't really understand what they mean. You know, it just means that it was a level of an SMC trader where it failed to actually construct that liquidity. So since it failed to do that, they're going to be using that as a buying pool or a selling pool to continue on going with price. So I hope you guys got a little bit from this video. It was a quick one. Just some stuff that I want to show you guys. And yeah, I mean, just make sure you understand that a little bit more in depth, and you can get better at your trading and perfect your trading more as it goes, right? So I hope you guys enjoyed this video. I will see you guys in the next one. You guys know how it goes. Don't overtrade. Don't over leverage. Peace.